I'm Angeline Ong and welcome to a look ahead to Tuesday, the 6th of February. We start with Australia with central bank action taking place there. The RBA, an interest rate decision is due and the cash rate is expected to remain at 4.35%. Just taking a look at the Aussie dollar versus the US dollar, because this key event could very much affect the trading move of this cross. The Reserve Bank of Australia's interest rate are not likely to be changed, but the latest inflation data could influence the central bank's opinion on getting inflation back to target. This means that perhaps somewhere along the year, there's already talk that perhaps the RBA might have to increase rates in a time when everyone's talking about the Fed cutting rates potentially in the spring. From the UK, we've got the BRC Retail Sales Monitor, expectations for January 1.7% year-on-year. And we also get retail sales numbers out of the Eurozone, expectations for December, negative 0.8% month-on-month. For the US, look out for API crude oil inventories in a time when oil prices are falling slightly, as a lot of the focus still on demand rather than supply, although geopolitical tensions are still rising in the Middle East, with the US saying that it will still keep the pressure on to try and cool the hostilities there. From the UK, the earnings season starts picking up steam with BP out with fourth quarter earnings. BP is an interesting one to look at. This is its chart here, as you can see, because in the context of Shell out with earnings already, Shell shares, just showing it to you here, fell after they flagged impairment charges around $2.5 billion to $4.5 billion for the fourth quarter. This was mainly related to the Singapore refining and chemicals hub that the oil major is looking to sell. At the same time, when it came out with that announcement, BP's shares also fell. To be honest, pretty much weighing down, those two stocks weighing down on the FTSE on that day. Shell stock, though, just looking at that one more time, has gained some 10.5% in 2023. Elsewhere in Europe, have a look at the banking sector, because we have earnings out of UBS out with fourth quarter numbers. Spotify, we are also waiting on that, and also Metro Argay out with fourth quarter numbers. Ford Motor will be out with fourth quarter earnings out of the United States. That will be interesting, given we've had Tesla recently coming out saying that it expects slower growth this year. Perhaps what's more interesting is Snap, which is all sessions on the IG platform. There you go. There you go. Here's a look at Snap for you, and as you can see here, is fallen since the high seen in 2021. However, it has recently been creeping back up since the 24th of October or thereabouts, and Snap, the parent of Snapchat, recently also got a lift when Wells Fargo upgraded the stock to overweight from equal weight. That was around early December, the 11th of December, I believe, where the stock hit its highest level in 1 year and 4 months. Wells Fargo is saying that it sees advertising positively inflecting at Snap for the first time since Apple's privacy initiatives in April 2021. Watch out for what Snap says about AI, as well as that has the ability to move the stock, as we've seen with Microsoft and also with the likes of some of the other Magnificent Seven. Last but not least, look out for Eli Lilly, Hertz Global and Omnicom, all out with fourth quarter earnings. And that's it for now. For more market moving news, we'll be back on Beat the Street at 13:30 London time to give you a heads up to the US trading day. And IG's Jeremy Naylor will be on at 7:30 on early morning call ahead of the European market open. Follow me on Twitter at Angeline Ong. This is IGTV.